Start with you. What are you expecting on the market today? And just tell us about these levels that you're watching, because we've gone through that 4,000 point mark now. We're at 3,996. Where to next?
Right, we have gone through a few levels this morning. This is the intraday graph of the Australian share market. It's not a pretty looking graph, and that line is at that 4,000 mark. You can see we're under that at the moment, 3,996 points. So we have broken the support level at 4,026 points, which is now resistance, and we've also broken the psychological barrier at 4,000 points. The next level that we're going to be watching is 3,923 points, 73 points. So we'll be watching that on the market very closely to see whether that's going to hold today. If we have a look at the market, it is red across the board. All sectors are trading lower, and you can see that while it's a red across the board, there is one area which is green, and that's the gold miners. If we have a look at the top 20 stocks, there's only one stock trading up today, and that's Newcrest Mining. The top 50 stocks, there's one stock trading up, that's Newcrest Mining. And if we have a look at the top 100 stocks, there's 3 stocks trading higher in the top 100, and they're all gold companies. So it does look like gold, the safe haven as as investors bet that we are going to see more quantitative easing around the world to combat the slowing growth that we're seeing and the problems that we are seeing in Europe. But I think the biggest force today may be in that energy sector. We saw oil prices down by a massive 3.8% on Friday night. So altogether, it does look like investors running from growth as signs that some of the, the high-flying countries like Brazil, India and China all showing signs of slowing growth. And of course, Europe going backwards and the softer numbers coming out of the US certainly going to be pretty hard for our market to overcome today.
It was saying that the Brambles capital raising that we're seeing is also going to be an added burden on the market today. Do you think that's likely? And what do you make of that news in particular with Brambles?
Well, usually if we see capital raising, we see investors holding some of the holdings within that sector to make room for the discounted capital raising. That's probably what we'll see in that industrial sector with this Brambles capital raising. And it does look like Brambles have had trouble selling their recall business. They were hoping to get about $2 billion for that business, and that was to help to pay off debt as well as fund growth opportunities and the possibility of a share buyback. It does look like that's all now off the table. They'll be looking at a $448 million capital raising, and instead we'll be looking at keeping recall. So it does look like no success in divesting that business. So this capital raising is part of being able to keep recall. Of course, earlier on in the year, they also flagged a capital investment plan of $550 million for their pallet business. It does look like that's still going to go ahead, but all up a very difficult day to be doing a capital raising. It's going to be very interesting to see what the take-up is going to be. Of course, no risk to Brambles because it is an underwritten issue, but the underwriters, they'll be hoping that they're not holding too much.